Hello everyone, welcome to elliottwaveforecast.com YouTube channel. Today is December the 8th and let's take a look here at the chart of the day for today, which is the Nikkei future 60 minutes time frame here. So we can see right here we have a pullback, a sell-off in the form of an ABC, which is a zigzag structure, right? Now we ended the C exactly at the area where it's supposed to end or supposed to react, which is the 100% extension of the A leg. However, currently it is trying to go down again and it might still break below 32,211 now, which then the structure is going to change if that's the case. Possibly you can still call it within a wave 5 if it breaks lower again. You can still call it this way and therefore still extends lower within wave 5, right? But for now, as long as we stay above 32,211, we might potentially extend higher. Now this is, when you see something like this is not like we don't really encourage trading every single swing, because there's only couple of conditions that we can that allow us to trade, and everyone must have that kind of rules and conditions that you can take the trade instead of trying to trade everything that you see on the chart, right? So here let me explain to you a couple of things which is kind of the most important thing that you need to understand, and then we also discuss some possibilities and so on. All right, so I'm gonna move to the daily time frame to explain to you guys what I see. So here's the daily time frame. I'm putting this wave 4 here, which is what you see here in the 1 hour, and that is this wave 4 here. All right, so let's complete. If this is wave 4, this will be a wave 3, and if this is wave 3, this will be a wave 2, and if this is wave 2, this will be a wave 1. So you're talking about a potential 5 waves rally in the form of diagonal, because it has an overlap from this low October 5th, right? Okay, so couple of observation here, which is the most important information for us. Number one, okay, this wave 3 here is actually not the is still below this previous peak, right? It is still below this previous peak. So if I look at basically this is not the all-time high, but this is the most significant high so far, right? No, actually this is the all-time high, my bad, right? It is the all-time high. So if you take a look at the all-time high, going here again, if you take a look at the all-time high, okay, which is on the June 2023, this decline here is clearly 3 waves, right? It's not an impulse, it's not a 5 waves down. Now in fact it did this perfect 1, 2, 3 bouncing from the 100%, which is where it's supposed to bounce if it is corrective. No extension, nothing, no 1.618, nothing. So what this is telling us is, number one, market is bullish. Market is bullish, right? Regardless, we can get a sell-off here and there, but market is bullish. Okay, and therefore eventually at some point it's going to break to new high again. The question is, are we going to break now or are we going to break later and do a bigger correction first? That's the only question. But the market is bullish. That's the conclusion, right? If the market, let's say, let's talk about the worst case scenario. What is the worst case scenario? The worst case scenario is, since we rally but we never break above the all-time high, the worst case scenario is what we call a double correction, in which this entire move, it will end only, let's say, I don't know, let me pick some degree. Let me just pick any degree here. This will be your W, and this is your X as an ABC, not 1, 2, 3, but as an EBC X, and then we got a big Well, it's not, I mean, yeah, it is kind of big, but it's not bearish, right? So then in that kind of scenario, you are looking at this move down to this area, the 100% to 161.8% of this WXY, right? So that's your potential target on the downside. And if, because this one is so close to the previous peak, it can also become a flat. It can also become a flat. Now a flat will be even more, it will feel like a bearish market, because then the C must be like an impulse, right? It will be like a strong move down like this, maybe just 1 2 3 4 5 like this, and it will feel kind of really bad, right? It will feel really bad, and a lot of people gonna ask, oh, are we really in a bearish market? Are we topped out? Are we and all those questions, right? But it is not. Why? Because this leg is corrective from the all-time high. So yeah, we can have a couple of possibilities in which we can see bigger sell-off. However, it is not a bearish market. It is still a bullish market. Okay, that's number one, which is this structure here is basically telling us that this is still pretty much a bullish market. Okay. Now number two is let's see. All right, so number two, let me go down to the 4 hour. So if you take a look at the current structure or the current sell-off from the November 20th here, right? This sell-off here. So we are labeling it, remember, as a B, C. So let me put the A, the B, and the C. This is the A, this is the B, and that's the C. But it's still don't know whether we're gonna hold or not. Now let's again measure what the 100% extension is of this proposed ABC here, right? So this is the 100% extension. So it's a big area here. So again, I think for now this view still remains possible and valid. We can still break below this previous low in the 1 hour, and still has not changed the idea that we can still see rally regardless. We can still do this and still part of the C. So we just extend the C a little bit if that's the case, before ending this 4 here, right? Remember, we're calling this like a 3. This is a 1. This is a 2, right? We saw it before on the daily time frame. So we can still do something like this, but as long as it's still within this 100% extension, then it's still okay and still can rally again to new high, or at least bounce in 3 ways, right? Now if it starts to feel super impulsive and super like the sell-off doesn't have any let up and still continue lower and even go to 1.618, now if that happens, then it's time to think of an impulsive structure coming down from here, and then that means we could have 1 2 and then, you know, like a 3 here, and then a 4 and a 5, and then we can go to the idea that we are actually doing a bigger double here from the all-time high in the Nikkei. All right, but as long as we don't break above or we don't break below that lower end of the 100% extension area, which is the 1.618 here, 31552, then this count here still remains valid for now. Now again, like I said, it may still break below here, but it doesn't really change the too much, other than the idea that we extend lower within C of 4. All right, so that's the update here, guys, and as always, if you want to get regular updates on the Nikkei or any other indices, Forex, commodities, feel free to check our service. We have 14 days trial. The link is in the description of the video. See you all again next time, and have a nice day, everyone.